Okay, well, as we've been telling you, lots of numbers coming in on the capital goods side, BHEL, and that loss is what we were just looking at. Siemens also came out with numbers. Siemens numbers look good. We do have Vivek in with us to talk about some of these. Vivek, so go with Siemens first.
Well, you're absolutely right. So what's actually happened in the quarter gone by has been the fact that a lot of these MNC capital goods companies have actually surprised positively across all metrics. Cummins was the first one, very good set of numbers. And now when you're looking at Siemens, again, it's a clear beat across all of the parameters that we were anticipating, and especially if you're comparing it to the CNBC-TV18 poll. So let's have a look at the numbers. Revenues coming in quite strong over the 4,825 crore mark. EBITDA, again, 596. Our poll threw up just an expectation of close to 560 crore. Margins at 12.3%, a slight beat of 30 basis points to our expectations of 12%. On a year-on-year basis, remember, margins have dipped. There have been multiple factors that we've been highlighting, especially given the fact that raw material prices and also the revenue mix that the company was working with. Lastly, profitability, again, good beat against our own poll, over a 10% beat. On the back of that, it's a very good set of numbers. So what's aided, this particular performance? So let's look at each segment individually. Energy revenues, have dipped on a year-on-year basis, but the rest of them, the smart infrastructure revenue segment, has done extremely well, over 21% revenue growth on a year-on-year basis. Mobility revenue up 72% off a lower base. Digital revenues, again, up over 33%. Auto inflows in the quarter gone by up 10% on a year-on-year basis, coming in at 5,971 crore. So the derived total order book that the company currently stands on is quite strong, over 47,000 crore. This includes, remember, the over 20,000 high horsepower mobility segment order that Siemens won. Now, what is it that the management is saying? Management, after a while, you're seeing very, very good commentary. First thing, they're saying that the order income growth came in from the energy segment, largely led by the transmission business. Decline in newer orders have come in the digital industries as well as the automation business on account of destocking. Lastly, they're talking about CAPEX. CAPEX demand, number one, public infrastructure continues to remain quite good. And what will be music to the industry's ears is the fact that they are saying private CAPEX is also beginning to pick up. So very good set of results, very strong commentary. It'll be interesting to see, given the fact that the stock has already run up quite significantly, whether it can move up higher even from these levels.
Okay, all right. Thanks a lot for that, Vivek, and filling us in with those details.